Foreclosures continue to increase across the United States, with completed foreclosures up 41% over the same period last year. I think the question we should all be thinking about is, why hasn't it got out of control yet, and will it? You guys all know that I am a data guy, and I spend a lot of time gathering, analyzing, presenting data for these weekly videos. But luckily, you don't need to do that. To get deals, there's really only one data source any of you need, and that is PropStream. PropStream exists to help investors find motivated sellers in any market across the US, and they have hundreds of filters to help you find the exact property that you're looking for. What's really cool is you can search for both on and off market properties. You can run comps, you can get in touch with sellers using their built-in marketing tools, and you can analyze as many deals as you want. When inventory is tough, like it is right now, PropStream is the key to finding your next property. So check them out at propstream.com/BP. Okay, so the biggest news is that foreclosure filings were up 7% from May to April, and that is a pretty big month-over-month increase, and they were up 14% year over year, both pretty significant increases. We have to understand what that actually means. Is this a lot in any sort of historical context? Does this mean a lot of people are foreclosed on? Nationwide, this means that about 1 in every 4,000 homes had a foreclosure filing in May of 2023. And when I say filing, that means it's in somewhere in the foreclosure process. It doesn't mean that they've actually been foreclosed on. So 1 in 4,000 homes had a foreclosure filing. Of course, this is very different from different places. The states with the highest total volume are Florida, California, and Texas, but that doesn't really tell us that much because it's just sheer volume. These are the biggest states, so it's obvious that these are going to have the most foreclosures. I think the better metric to look at is the foreclosure rate, which is basically the percentage of owner-occupied homes, what percentage of them are for being foreclosed on or in the foreclosure process. For those, the 3 biggest states are Illinois, Maryland, and New Jersey. Just for some context, like I said, on a national level, it's 1 in 4,000 homes, but for Illinois, it's 1 in about every 2,100, so about twice the rate. In Maryland, it's about 1 in every 2,200, and New Jersey, it's about 2,250. So all 3 of those states are seeing significantly higher foreclosure activity than the national average. If you're curious about on a metro level, not on a state level, the number 1 metro area for most foreclosure activity is Lakeland, Florida. That is 1 in every 1,361 homes. There's also Elkhart, Indiana, Cleveland, Ohio, Palmdale, Florida are also near the top. Before we get into the rest, if you're curious about which states are least affected, it's a lot of rural states I'm noticing. South Dakota is the least amount of foreclosure filings, followed by North Dakota, then Vermont. So all really rural areas. So as you can see, the difference is really big on a national level. Like that in Illinois, it is 10x, 10 times the number of foreclosure filings than it is in North Dakota. That's sort of the headline data that we got in May, which is the most recent data that we have available. Things are trending upward, but the regional differences are really large. But I think what's important when looking at foreclosure data right now is to zoom out and take a more historical perspective. When you look at it zoomed out, you can see that what's really going on here is that foreclosures have risen from pandemic lows, but they are still way below pre-pandemic levels, and they're actually starting to level out. If you look at where we are today, which a lot of people are worried could turn into something like 2008 and 2009, we are about 1/10, 10% of where we were during the foreclosure crisis after the Great Recession. So things, yes, they are moving up, but we got to take this all with a grain of salt and understand that in a historical context, foreclosures, at least right now, where we are sitting today, the most recent data is still really low. Before we move on, I just want to say that I often get this question about maybe there's just this backlog of foreclosure. But right now, the data actually says no. No matter what way you look at it, if we're looking at the total number of foreclosure filings, which is what I was talking about before, or the total number of foreclosure starts, which is the beginning of the process, or foreclosure completions, which is the end of the process. They all have different numbers, obviously, but the direction is the same. The trends are the same. They are all up year over year. They are trending upward, but they are still well below pre-pandemic levels. That is true for every stage of the foreclosure process. I think what's important is a lot of people over the last couple of years were assuming that a foreclosure crisis or spike was going to happen when the foreclosure moratorium ended. But foreclosure moratorium ended almost 2 years ago. It's a little less than 2 years ago. It was like September 2021 was when it ended. So if there was going to be this huge wave, I think we would already have seen that in the foreclosure starts data, but we haven't yet. So I think the question is like, why are foreclosures going up in the first place, and what is going to happen here? I think the reasons that they're starting to trend upward are obvious. Like, first and foremost, we just talked about it. There was a foreclosure moratorium and that ended. And so obviously there's some people who were defaulting during those 2 years that there was a moratorium, and now they're working their way through the system. The second is inflation. It is eating away at people's spending power, and unfortunately, a lot of Americans are having to face hard decisions about how to apply their money, and so more people are likely to default on their mortgages. There has been less stimulus. After the last couple of years, the government was handing out checks. There was other forms of stimulus that was helping people pay their mortgages, and there is just economic uncertainty. There have been some high-profile layoffs, but the unemployment rate stays pretty low. But I think all these things combined lead to a pretty obvious scenario where foreclosures are starting to go up. So why it's going up is really not a great question in my mind. I think the question we should all be thinking about is, why hasn't it got out of control yet, and will it? To me, I think there are a couple things we need to look at. The first is something called the Dodd-Frank Act, which was a government policy instituted after the Great Recession that really was aimed at reducing risk in mortgage lending. So there was a lot of really shady lending going on in the lead up to the Great Financial Crisis. But now borrowers, the average person who has a mortgage, are in a much better position than they were. The average credit score is higher, default rates are lower. And so we're seeing much better credit quality. That basically means that loans are going to people who can pay them in a way that didn't used to exist. And so less people are likely to be foreclosed on or default because of that. The second thing is that a ton of people refinanced during the pandemic years, right? We had historically low mortgage rates, and tons of people took the opportunity to lower their mortgage rates. This made existing homebuyers who already probably had better positions than what was going on in the 2000s lower their rates, and now they're even more able to afford their mortgages because low interest rates and refinancing. The third is that home buyers have tons of equity in their home, and this is super important. With the run-up of prices over the last couple of years, even despite Dodd-Frank, even despite refinancing, if someone's in a bad financial situation and they're not able to make payments on their mortgage, they are unlikely to go into foreclosure because of all the equity in their home. They could just sell their home for a profit, like put it on the market and sell it rather than go through the foreclosure crisis. And I think this is another key distinction from 2008, is that people have equity and they're unlikely to be in a position where they would have to short sell. So that means that foreclosures are less likely. So what happens from here, right? Obviously, the data I've been showing you and this analysis is what's gone on to date, but we don't know what's going to happen. My personal expectation is that I think foreclosures are going to continue to rise in the coming months, right? Unemployment, it's still really low, but all signs are pointing to it starting to tick up. I don't think we're going to see this huge wave of unemployment in the next couple months, but I do think it's going to steadily increase for the next 6 to 12 months. Less stimulus does also make it harder for people to afford payments, and anyone who has an adjustable rate mortgage, which is really not that many people, but there are people with adjustable rate mortgages who are going to be at risk due to much higher interest rates. Even though I think foreclosures are going to keep going up for the next couple months, I expect it to be more of a return to a normal level, perhaps something like the levels that we saw about 2015 to 2019. Actually, on my podcast on the market the other day, I was talking to Darren Bloomquist, who works at auction.com. It's a foreclosure company. And they say that they expect it to get to around 200,000 per year. That's what they think is normal foreclosure rates. And that's where they think things are heading. And they are the experts. So I don't see any reason why I would differ from that opinion. I think that's where we're heading because as of now, there just isn't any data or evidence that suggests there is going to be a wave of foreclosures like there was in the late 2000s. Could that change? Sure, yeah, if there is a massive increase in unemployment, well above what most economists and forecasters believe were in store, it could definitely increase. But without the credit issues we saw in 2008, it's not the most likely scenario in my opinion. That's all I got for you guys. Thank you guys so much for watching. I appreciate it. If you have any thoughts, questions, comments, please hit me up in the comments below. And don't forget to head to propstream.com/BP to find motivated sellers nationwide so you can lock down your next real estate deal. I'm Dave Meyer for BiggerPockets. Thanks for watching.